regularly. Now, let's talk about another theme, right? Is consumption going to come back in a durable way? It's been capex. Then there was a break. And for the last 1 year, I mean, you can argue that actually neither capex nor consumption has done that well. Will consumption start to fire now? Nimesh, you've looked at some numbers.
Yes, I've looked at some numbers, and this has been a big debate in the market as well in the last few weeks that is this a time for a portfolio reset, and can consumption make a big comeback? So let me go to the wall and explain with some data as well as to why I'm saying this could be the time for consumption stocks to do well. So the big question that we're asking is this a time for a portfolio reset and a shift from capex to consumption? That's the big theme that's been debated as well. So first look at what the capex stocks or the capex companies have done in the last 4 years. So they've relatively outperformed, largely on back of the government push for capex, and that has been a big reason why all the capex related sectors have done phenomenally well in the last 4 years. So the chart will come up. This is the data for the last 4 years CAGR of the capex related sectors and all. So the big outperformers is the BSE PSU index is up 29%, the infra index is up 28%, the industrial index has been the biggest gainer, up 35%. This is a 4-year CAGR, and so is the likes of BSE capital goods up 33%, and even the utilities index is up 24%. So a mix of it, all these caps goods related indices are up between 25 to 35%. This is a 4-year CAGR for the capital good related sectors. Now, this is contrast to the big underperformance of the consumption basket in the last 4 years. They've done well, but they've relatively underperformed. The auto index in the last 4 years is up 24%, but look at the other sectors like consumer durables, FMCG, as well as oil and gas. They're up between 12 to 15, 16%. So that's the kind of performance we've seen in the consumption basket in the last 4 years. So relatively, they've underperformed the capex basket. But the question is, can they see a big pullback now? And can this be a year of, can the consumption basket see a big comeback? And what are the triggers to watch out for, and why I'm saying it can see a pullback? The first is the big shift in focus for the government in this budget itself to consumption from capex via cut of the income tax. So that was a big trigger to watch out for. The second was front loading of interest rate cuts by the RBI this year. The third is good monsoon. It's been progressing well. And the fourth, but not the last one, is the big GST rationalization now seems to be a reality with the fact that the government is moving ahead and there's going to be big changes there as well. So these are the 4 triggers why a lot of people believe that consumption can see a big comeback. And to back that thesis, I was reading an interesting report from Bernstein, which came earlier this week, and they anticipate a great switch from capex to consumption in the years to come. So recently, they've actually upgraded staples to a mild overweight, and they've upgraded overweight to durables to overweight as well. So that's been a big strategy shift by Bernstein in terms of upgrading few sectors. Now within that, they are very overweight on QSR, retail and autos. That's a selective overweight within the consumption basket. They are equal weight on utilities. However, they are underweight on the industrial. So there is a big shift happening towards consumption from the capex side. So that's what even Bernstein believes. So the big question is, can the consumption see a big pullback? The big lesson from the last 4 years is that wherever government backs in, those sectors outperform. And now it looks like the government is focusing on consumption. So maybe it's time for the consumption to see a big pullback. So maybe you can ask, Harish, if you've heard this data.